Well, if you've been sitting on the sidelines waiting for the housing crash or mortgage rates to come down, one of those might come true. And so my name is Dan Frio. I do this report every day to inform you guys what's going on in real estate. So our focus today is basically on inflation. Okay, so there was two figures that came out this week. One was the consumer inflation number, and you probably saw that all over the news yesterday. It came in lower than expected. And then we were waiting on the sidelines, waiting for today to find out on the wholesale side, on the producer side, what's going on with inflation? Well, we had that great news coming in today as well. So June wholesale prices rise less than expected in another encouraging inflation report. So a lot of you guys say, Dan, you know, these reports, especially CNBC, it's a bunch of BS. So the producer price index for June had a smaller than expected increase. Labor Department said came in at 0.1. Well, let's not take CNBC's word for it. Let's get over to the U.S. Department of Labor. Okay, maybe you'll say that maybe they're legit then. So they're coming down here, and the producer price index increased 0.1%. So it matches. Okay, so here's my problem with this. Well, I'll get to that in a second. Let's get over to the calendar. Let me go over what the numbers came in at and why the markets are loving this stuff. So the core CPI and the CPI and all these numbers up through this area here on Wednesday. Core CPI is the consumer price index that you and I pay. It's basic inflation, but they strip out food and energy. Okay. The expectations were, well, the previous reading, it came in at 0.4. This time they were expecting 0.3. It came in at 0.2. And then the readings all the way down through month over month came in lower than expected, and year over year came over lower than expected. Then you go over to now the Federal Reserve's pivot points, jobs and inflation. So that's today. Today, what we're seeing is the initial jobless claims. It was right in line, but this might be the area that a lot of people focus in on saying, well, the jobs market is still way too strong for the Federal Reserve to take their foot off the gas pedal. So, okay, I get that. So they're going to, well, I'll give you my surprise at the end on what the Fed's going to do. And then the PPI. What the PPI is the inflation numbers at the wholesale levels, the producers levels. So last month was a complete anomaly. It was down 0.4. Negative 0.4. The expectations this time was for 0.2. It came in at 0.1, as I just showed you all over some different charts. So those numbers are greatly encouraging. Here's my problem, though. If you go over to this, look at the news. Delta reports record revenues and profits. Okay. And then look at over here to the right, stocks rise amid signs of warning inflation. Then PepsiCo lifts profit forecast. Okay, let's just stop it there. We got Delta and Pepsi. They're saying they have a record profits and record revenues. Okay. So when you go over to here to the core inflation numbers, if you have producers that are actually hitting record numbers in profits, that means something's there. So what could happen? Well, their cost of goods probably went down. Their raw materials probably went down. Okay, so they could potentially either pass that savings off to you and me, the consumer, or they can hold it to increase their profit margins. Well, if you go over to here, what are they doing? Well, they're increasing their profit margins. So that's another area where we flip up to the consumer side of the equation. Inflation on the consumer side of the equation is coming down and coming down dramatically. But just wonder if the producers, the wholesalers would actually pass some of the savings on to us instead of having those record profits. It would drive down our commodity prices and our inflation numbers even more. And I'm still expecting this number to hit in the 2s at the next reading because of the shelter numbers. So that's what we wanted to talk about today is on the inflation front. You go over to here, here's another area that's of concern, and this is what's going to keep a lot of people on the sidelines right now, especially if the Fed's going to pivot or not, is U.S. weekly jobless claims unexpectedly fall. So that's a kind of an oxymoron there. So jobless claims fell. So what it means is less people filed for unemployment. Okay, so now the Federal Reserve is going to say, guys, the job market is way too strong and people are spending way too much money. We're going to still have to keep continuing to increase rates. So what is expected from the Fed at the next meeting? Well, here it is. And these numbers aren't really moving. But what I want to show you today is a little bit of difference. If you go to that CME exchange like we usually do on a daily basis, which is right here, the probability of the Federal Reserve raising rates, you can see, well, let's go through that while we're here. Right here, it says that the next meeting, the Federal Reserve is expected to raise rates to 5.25 to 5.5. There's about a 95% chance that's going to happen. Guys, It's going to happen. Okay. But what I want to show you guys is there's a whole bunch of things on here that you can look at. If you go to the dot plot, you guys might not have a clue what the dot plot is, but you might hear it all the time on the news. The dot plot is basically where all the Fed members, they go in here and they put a little dot on where they expect the federal funds rate to be for the next few years. So right through here, you can see the federal funds rate chart, the dot plot, is saying all those green plots, right, or all the blue plots that you're seeing at the 2023 meeting, so if you go to the left, it's reading a 5.5% rate. Okay, so what that means is the federal funds rate, they're expecting it to get to 5.5%. Well, right now, where is it and where is it going? Well, the probability is we're going to be there in a couple days, well, a couple weeks, because the Federal Reserve is expected to raise rates to that level on the July meeting. So what that means is if you go back to the dot plot, let's go to here, that means we're going to be there. And if you look down at the bottom, it says 2023. So what that tells us is the Federal Reserve, if they make the move in the next meeting, they're going to hit it and stop because they hit their dot plots. You can see above that, there's only a few members that thought rates would go even higher. But the dot plot basically says consensus is telling us that the Federal Reserve should be at 5.25 to 5.5 on their yields right now. So that's what it's looking like. Okay, so that's my expectation. The Federal Reserve is going to move at the next meeting by a quarter. And then from there, all the dot plots and everything tells us everything else is off the table. So fantastic news when it comes to mortgage rates. So let's see, because of all the news that we have today, what's going on in the market? Well, we have another huge day, folks. If you look right here, this is what we focus in on. This is the MBS. This is a mortgage-backed security that trades on Wall Street. The yield is the biggest part of your mortgage. Okay, all you need to know is see the price up here, 98.44. As that price goes up, the yields come down. Okay, so there's a yin-yang, an inverse relationship. If the price goes down, rates go up. Right now, we're seeing there's a 42 tick up. That means we're going to reprieve on rates probably about 0.1%. So some people said yesterday, hey, Dan, you use Mortgage News Daily on a daily basis to provide us rates and everything, and it didn't go down as much as you thought. Well, what's happening right now is a lot of banks are sitting on the sidelines and they're getting hammered profits. So this gives them a little bit of ability to not drop their rates as much as they should or could to kind of cushion their profit margins. So that's why it's relevant of what we do. I'm a mortgage broker. Okay, what I do is I've been doing this for 33 years. I can help you get pre-qualified, maybe talk about how much can you afford. Can you maybe pull out some equity in your house to pay off some of those high interest rate debt credit cards that you have? Any options that you're looking for in regards to a home mortgage, I'd love to help you. Here's what we do. My name is Dan Frio. Like I said, I work at a federal bank, meaning we are nationally chartered. So I can do loans in any parts of the country, including Puerto Rico. But we're also one of the country's largest mortgage brokerages. What that means is, I can use up to, we have about 77 lenders in our stable right now. I can use their programs and their rates. So if my rates at the bank aren't the best out there, I can go and scan the whole country to help you find the best rate in town. But our goal here is to help educate you along this path. So the first thing people do is, you need to talk to somebody, talk to an expert about how much you can get qualified for. And then at that point, you need to get set up with a good realtor, a full-time person who knows your markets. We have that process for you as well. If you'd like to take advantage of it, it's free. We can vet realtors in your area and refer you out to those at no cost to you. You don't have to do it. It's just an option that we have for you. And we're here all the time for you. And we have, in my case, I have over 30 years of experience in this business. So if you'd like to reach out to us and see, what you can qualify for, if you're looking to buy, refinance, maybe start your venture into investment properties, please give us a call, 844-775-5626, or you can click the Apply Now button, fill out as much as you can, but within 24 hours, there's going to be a mortgage rep, either myself or one of my mortgage teammates, reaching out to you to answer any and all the questions that you have. So one quick thing, if you guys would, if you could do me one favor, give me a thumbs up. I'd appreciate it. Thanks so much. I'll see you tomorrow, folks. Bye-bye.